What's going on, team? Welcome back to another week. Welcome back to another weekly stock talk. We're going to make this video really quick, short, and sweet. Today, what we're going to do is we're going to talk about the market update on the crash that we are expecting. Go over the S&P 500, kind of what's going on in the economic events, and what we should expect, how you can profit from that. So jumping into the S&P 500, we can see that basically since we talked about this last week, we mentioned that we were coming up to this 180-day and 200-day simple moving averages, and we had potential to either get rejected there as we have before, or we get rejected at this top channel trend line. And this channel trend line is a channel that we've been in since the beginning of this year. So let's go ahead and zoom out so that you guys can see that. So basically, since the beginning of January, we started up here, we peaked out in the market, and then we ended up selling off, came down, bounced, came down, bounced, came down, bounced, came down, came back up, got rejected, and now we're getting rejected as we make this video. So let's go ahead and zoom back in so that you guys can see the closer picture. And basically what we've been talking about is we were going to get rejected by this level, either 180-day or the top channel trend line. What happened is we came up, we kissed that top channel trend line, and now it looks like we are starting to get a rejection. We basically closed just barely under the EMA. If not, we did dip down a little below it, but we closed basically at the EMA today. And so tomorrow, what we're expecting is a continuation of the sell-off that we saw happening today on Monday. And so not much has happened in the economic events today. Actually, we had the factory orders a month over month that came in 1% better at 1%, which was better than expected. 1% better than expected. And then the ISM non-manufacturing PMI, that came in at 56.5, expected was 53.3. So that came in a little better as well. But technicals are not something that can get beat. I mean, obviously, it's not 100%, but oftentimes, more often than not, we do see these technicals panning out. And on top of that, we really saw the rally come up basically because the Fed was talking about how they were thinking about slowing down the intensity at which they're raising rates, which is still probably going to happen. As I mentioned in the previous week's video, I'm personally expecting the rates to only be raised 50 basis points versus the 75 that we saw the last two times. But regardless, rates are still going up, and so that's never a good thing, right? Obviously, that's going to hurt companies. That's going to hurt revenues. And so at the end of the day, that's still not a positive thing. It is obviously a positive catalyst in that particular moment when that gets announced that, we're slowing down. And that's exactly what we saw. We saw a spike in the price, but that didn't last too long. We came up to that resistance level, got rejected, and now we're coming back down. Again, we do have that gap fill that still needs to get filled. The RSI, we did push up slightly higher than we were last week, but still not extremely overbought, but we are overbought enough to start seeing a downtrend. And obviously, we're starting to see a curl to the downside here on the MACD, similar to what we saw last week. And then we ended up seeing that bounce right off of the EMA on the daily chart. And so we ended up seeing that bounce, came back up, got rejected, and now we're coming back down. We broke the 200-day simple moving average, broke the 180-day simple moving average, and we basically stopped today at the EMA. So tomorrow, what we're watching here is if we break below the 180-day if we break below the EMA, we're going to end up going and adding more to our short position. We already had a short position right at these levels, right around that $400 level, is where we started building our short positions. And what we're doing when we're building our short positions is we're basically buying into SQQQ, which is a triple leveraged ETF of the NASDAQ and the SPY. And so we did end up seeing a little bit of a drawdown here, but we have been adding to our short position as we're coming back up because, again, we were expecting a rejection here at 180-day and the top channel trend line. So, again, we're adding size to the SQQQ position. If we break below this 180 or if we break below this EMA here and break below this support level, we're just going to add more size and run this drawdown back down. We are expecting at least a drawdown back to this gap zone to get that filled. So from the gap zone to where we're currently at, we're looking at about 5%. And since it's triple leverage, that's about 15% on the SQQQ position. TQQQ, if you are going long, I would advise being warned about, or I would warn against doing that. And until we at least see a break above this channel. If we do see a break above this channel, all power to you. That's actually when we're going to be considering going into a long position. But until then, that's basically what we're watching, and this is what we're expecting. We're expecting this gap to get filled, and at that point, we might start considering a TQQQ position if we do start seeing the technicals, the RSI, the MACD adding to our favor. And that's really going to also be driven by the FOMC meeting that we're going to be seeing on the 14th of this month, at which we're going to get announced how big of a rate hike we're going to be experiencing. So be aware of that. That's just a quick update as to what we are watching this week, and the two we're trading this week as well. So if you guys have any questions, drop them in the comments below. If you guys found this video useful, smash that like button, subscribe, share this with a friend. And again, if you guys are watching the same things, let me know in the comments below. If you guys are watching different names, let me know in the comments below, and let's have a discussion. See you guys on next week's Stock Talk video.